Someone buys real estate and they sell real estate for profit, let's say a 10% rate of return on his money, he's actually at conversion at zero. You should maybe consider a hedge, especially if you're doing a short-term investment. Do your homework, don't just blindly invest. Last time we met, I spoke about Indonesia. Indonesia, as you probably know, one of the fastest growing economies in Southeastern Asia. It's the fastest developing middle class. New president has a very solid plan to increase internal production, to build production of automobiles, planes, defense systems, and so on. Real estate, of course, is an important component for growth as infrastructure. What is important to know that the factors like the currency rates, inflation, and the internal rate of central bank is very important to internal growth and also investors that are looking to enter the markets of Indonesia. The plan at least for the newly appointed government, I mean, they're a year old, is to really hold inflation. Last time there was an intervene where Central Bank of Indonesia held its core rate at 4.75%. So it's quite a low rate, which really allows for high growth of economy. Considering that banks are doing nightly borrowing, it is very important the rate that they actually lend to the consumers. So the lending median interest rate that they're lending now to consumers is somewhere between 6 and 7%. Is it good for a growing economy? It is a very low rate, considering the rates in other third world countries. And that also impacts, of course, the real estate market, because developers borrow money from the banks to build, and of course the rate at which they're borrowing impacts their profit margins. So if the interest rates are very high, they're unable to capture good margin. And if they're unable to do that, of course, they're not going to build. So interest rates are very important to growth of any economic center, but a high impact on also the sectors that are borrowing money from the banks, like the developers of real estate. So also important for people, the stability of the currency. Currency impacts the return of the investor. So if they, let's say, invested when Rupiah was at, let's say, 15,000 per US dollar, and now Rupiah is almost at 17,000 per US dollar. Obviously, when they receive Rupiah, because they receive Rupiah if they sell or rent their real estate, now they need more Rupiah in order to convert to a dollar or euro or any other currency. So that impacts their return on investment. So if the Rupiah is, let's say, up now, let's say 10% from let's say 2 years ago, and the investor expects, let's say, a 10% rate of return on his money, he's actually at conversion at zero. So this is very, very important. Someone buys real estate and they sell real estate for profit, and now they need to calculate that they invested at one rate and now it's at another. And so if they made 20% on their money and they're now converting back to US dollar or euro, they're actually minus 10% on their return. So we do expect for the Rupiah to be stable. Yes, we have seen the rise of inflation as well as devaluation of the currency. Also, one of the things that are expected, and this has been in talks for the past year since the new president is in place, is getting rid of the zeros, multiple zeros in the Rupiah. That should also have a positive impact on the economy, maybe not so well accepted by people that live here, but overall, usually the devaluation of the currency, it's not really a devaluation, it's just really getting rid of an accountable number of zeros, is also should have a positive impact. I think it's important that, again, in any investment, as we spoke multiple times before, to really look at economic indicators. And if you are doing a large investment in foreign currency, you should maybe consider a hedge, especially if you're doing a short-term investment, right? Hedge yourself. There are instruments out there, Forex instrument that you can actually hedge your investment. Of course, that's more in the size if you're investing somewhere from about $5, maybe $10 million. And if you're investing for terms that actually have the Forex exchange options that allow you to hedge for a term of your investment. So let's say a year or a year and a half. Usually they are a year long, but there are some potential options. And actually, bank can create an instrument for you to hedge against inflation as well. So that's something should be considered. And of course, again, do your homework. Don't just blindly invest. Consider not just how you're going in, but truly consider how you're going to be going out.